It's a brand new week on Business Morning. Welcome and thank you for joining us. I'm Chimeze Obi Iwawu. We kick off on the global oil market as some prices slipped in early trade today as traders eyed an OPEC technical meeting this week, which is expected to recommend an easing in supply cuts that have been propping up crude prices. Brent crude fell 27 cents at $42.97 a barrel, while U.S. West Texas Intermediate crude was at $40.27 a barrel, down 28 cents. Oil was little changed last week as a resurgence of coronavirus cases prompted several U.S. states to impose tighter travel restrictions that could dampen oil demand recovery at the world's largest consumer. However, prices rose more than 2% on Friday after an upward revision by the International Energy Agency in its 2020 oil demand by 400,000 barrels per day. Oil prices have recovered sharply from multi-decade lows in April after the Organization of the Petroleum Exporting Countries and allies, including Russia, a group known as OPEC Plus, cut output by a record 9.7 million barrels per day for 3 months since May. OPEC's Joint Ministerial Monitoring Committee will meet on Tuesday and Wednesday to perhaps recommend the next level of cuts. OPEC and Russia were expected to ease their supply cuts as global oil demand has recovered and prices have bounced back. Libya exported its first crude cargo in 6 months on Friday after a blockade by Eastern forces, but then reimposed force majeure on all oil exports on Sunday. Its National Oil Corporation accused the United Arab Emirates of instructing the Eastern forces in Libya's civil war to reimpose the blockade. Now, the President, Muhammadu Buhari, on Friday signed into law the revised 2020 budget of 10.8 trillion naira. The budget was reversed from earlier 10.59 trillion naira budget passed by the National Assembly because of the adverse effects of COVID-19 on the economy. Okay, let's look at the nitty-gritty of this budget with Professor Akpan Ebo, a professor of Economics and Public Policy at the University of Uyo. Professor Ebo is also the immediate past director of the West Africa Institute for Financial and Economic Management, WIFEN. Good morning, Professor. Thank you very much for joining us on the show.
Good morning, and thank you for having me.
10.8 trillion naira, that's the budget for 2020. What do you make of the whole content of this budget?
Well, I think even if it's been signed into law, still estimates, because we have to find the Congress to find the resources to execute the entire budget. I think the budget is in the right direction, given the COVID-19 pandemic and the sharp decline in oil prices. Let's not forget that, as it is so stated, the 10.8 trillion naira is in nominal terms, it's not in real terms. So maybe if it's in real terms or as inflation continues to rise, the entire budget might be slightly lower. But it's okay. My only concern is that we are still placing too much emphasis on oil revenue as a way forward. Despite the volatility and the uncertainty in the oil market, we're still saying that the oil will sell at $40 per barrel, even though at one point it was $20 per barrel. So I think it's in that direction. The only worry is also, if you look at the budget, there's a slight decrease in expenditures on I think health and education. Health may be understood in the sense that a lot of money has been set aside for the COVID-19 pandemic. I think yearly we should be increasing expenditure on both health and education. I'm also impressed about the amount set aside for social investment program. The other worry is the issue of the debt. We still spend a lot of, I think about 1.something trillion, if not 2 trillion, to service our debt. That's also worrisome. But you know, the budget as presented is very aggregative. So as we always say, the devil is in the detail. But I think the entire package seems okay. The other issue that we also have to commend government, because for the first time, the budget was presented early enough. and they were to go to town, start execution from January 1st. All of a sudden, the pandemic hit the country around February, March. And then they went again to revise the budget. And I think we have to commend government for the speed at which they've done the adjustment. And that's why it's entitled to revise and repeal budget.
Now,
Yes.
Professor, budgeting is a yearly ritual. However, this particular budget is coming at an unprecedented time, just as you mentioned.
Yes.
Now, the budget was revised due to the effect of the COVID-19 pandemic on the economy, and so it contains the 2.3 trillion naira stimulus program. Now, what, in your view, is a critical development plan do you hope to see this budget achieve?
Well, it's a yearly plan, and in terms of achievement, you look more at the capital expenditures and the stimulus plan. Don't forget that with the pandemic crisis, the economy will hit a recession of about, the GDP will contract about almost 5.8% at the end of the year. And the recession is a special type, supply and demand of the economy. We experience the recession. So it's not a traditional demand-driven recession, it's demand-supply recession. And so you need both fiscal and structural policies. So the stimulus package is supposed to at least reduce the adverse effect of the recession and reduce the negative impact on the economy. The other issue is that the 2.3 trillion stimulus package, is that enough? Is difficult. It depends. As I'm saying, the devil is in detail. Depends which sectors will gain from the stimulus package and so on and so forth. For example, we always argue that it is good to reduce recurrent expenditure, but when you anticipate a recession, at least on the demand side, you need to increase household expenditure, household and their families. So if the economy hits a recession, you need to increase aggregate demand. So the reduction in the household and their families will be a problem. But going forward, I've seen when they present the MTEF that in 2021, the household expenditure will increase. But for me, it will be, let me say, a miracle for after a year for us to get out of the recession in the middle of next year. It will be a miracle in the sense that when you contract by almost 6%, it will take very aggressive fiscal policy coupled with structural policies to get out of such a situation.
All right, Professor, let me take it up. Professor, let me take it up from there. You and I know that oftentimes we say we want to do something, but we end up not doing it. The president says all MDAs will be allocated 50% of their capital allocation by month end. In this case, coming up with policies, programs, and projects will not be a problem, but the implementation is where the problem lies. How do we measure budget implementation and hold these MDAs accountable?
So what we do is that instead of having, don't forget that we are half year of 2020. The president says by the end of the month, they must release 50% of the amount assigned for capital expenditures. So 2 months after that, there should be an evaluation, monitoring and evaluation of those projects and to see whether that has been done. Because the bureaucracy in government is a big problem. There's a lot of lax structure, and that will pose a problem. So for me, if they can overcome the lax structure, that is the bureaucracy in government, it might go a long way. It might assist. Otherwise, we just have the usual problem of implementation. And I hope that all stakeholders will see the need to take the execution of the budget seriously, because we look at the rate of unemployment in the system, and some of these programs are supposed to generate or create jobs, then we should take it very serious. So we're only hoping that those concerned have had the president of the country and will do the release on time so that abandoned projects can resume, the contractors on site do not stop work, and so on and so forth. So we hope so, because as you've said, our major problem has been in implementation. So I will argue that at the end of August or early September, we should get a report as to the extent of the implementation of this budget.
Now, looking at the whole budget, where do you see the budget addressing the issue of unemployment and job creations? Look at what is happening to the special public work program proposed by the president that is meant to engage temporarily about 774 youths.
Yes, that's the interesting program, but you are aware of the controversy. That will create jobs if they can get out of the controversy, and also the capital expenditure, which is targeted at projects of infrastructure and so on and so forth, will also generate jobs. And the social investment programs should at least temporarily reduce the hardship of the unemployed. Those are the areas you look at in terms of job creation, at least for a year. But to be honest, going forward, we need at least a 5-year development plan where the budget becomes a 1-year plan submerged into the 5-year plan, especially more importantly, the capital component of the plan, so that it doesn't become a ritual. Okay, and there are some countries that always put in place 2-year budget instead of 1 year, but for us it's a year's budget. So in terms of unemployment operation, you look at the capital expenditure component of the budget, targeted at infrastructure and so on and so forth, and they also look at a social investment program. Those are the things that you look at to reduce unemployment going forward. You know, unemployment is quite high. In fact, it's a national crisis. And then you see, also people forget that the pandemic crisis has come. But before that crisis, the economy was not really doing well. The economy was still at the stage of stagflation. If you look at unemployment, inflation, even growth, it was sluggish. We still had a fragile economy. So the pandemic came and made it worse. So this budget has a lot to do, but can it do it in 1 year? That's why it has to be a continuous process, you know?
Okay. Yeah. All right, Professor. Now let's look at the assumptions. This budget is predicated on exchange rate of 360 to the dollar. And I'm sure you know that the official rate is now 381 naira to the dollar. What happens now? Is this a concern to you?
It's a concern, because the 260 naira to dollar is unrealistic now, because the rate on the street is quite different, but this is official rate, and I think even the CBN itself, for what we are reading, they've adjusted the rate to 380 or 81 to a dollar, and with this in mind, it will affect the budget, because a lot of the capital expenditure items have to be imported, and you need dollars to import this. You need foreign currency to import those items. So definitely, it will affect the budget. And I hope the budget itself has a contingency to take care of some of these uncertainties, because the 360 is unrealistic the way it is now. In fact, for me, the CBN is calling it adjustment. It is actually a devaluation. And it will affect the budget. And I hope that scenario will be built into as they go forward with implementation and as they give us the quarterly report. So definitely you are right.
All right. Even
the oil price. Okay, go ahead.
No, go ahead. I was going to talk about the crude oil, which of course the oil benchmark, of course, that was reduced from $57 per barrel to $28. Now, oil currently hovers around $40 per barrel. Is this realistic?
Yes. You see, the problem with the oil price is not even whether you make it 28, 40, it's uncertainty and the volatility. You don't control the price. You don't control the output. It's what we call an exogenous source of revenue. You have no control over it. So in order not to let the model collapse, you should be very, very pessimistic about the oil price. That is my my argument over the years. Oil is a non-renewable asset, so one day it will finish. So you cannot plan an economy on the base of a resource that you have no control outside your domain. So, so going forward, in quote, we have to demystify, in quote, the oil sector. I'm not saying oil is not crucial, but whatever oil you have now, see it as a windfall and see it as such and target that money at infrastructure. Or make sure that in the short and medium term, you link your oil sector to petrochemical industry, pharmaceutical industry, agri industry, so at the time the oil finishes, you've made better progress. Don't forget that very soon, or not very soon, there are other sources of energy being developed. So my worry is that we are still putting too much emphasis on the oil sector. I hope going forward, we'll begin to do what I've tagged a non-oil budget. After all, oil contributes only 10% to GDP. Non-oil contributes 90% to GDP. The sooner we begin to take that pain of a non-oil budget based on our domestic resources and what we can borrow, it's better for us. Because at some point, we have to face that reality. So my problem is not whether you make it 28, 30, 40. It's the uncertainty of that oil price and the volatility. For example, OPEC has reduced the output for countries in order to shop prices. So in the short and medium term, you would think that, oh, revenue will go up because price will go up because you have reduced the quantity. But the issue of uncertainty, the shock, anything can happen in the global economy that could bring the oil price down. And more importantly, it's a non-renewable asset. And this country is blessed with several renewable assets that we can bank on. So that's my worry about the oil sector.
Yes, Professor Ekpo, yes, non-oil budget. We look forward to having that. Thank you very much for your time, Professor Ekpo. Professor Ekpo,
thank you for having me.
Professor of Economics and Public Policy at the University of Uyo. And the Central Bank, in partnership with the Bankers Committee, plan to commit 25 billion naira to the transformation of the National Theatre into a creative industrial park. The CBN Governor, Godwin Emefiele, reiterated this at the handing over ceremony of the monument over the weekend. He explains that the project, which has an 18-month completion timeline, has the potential of generating over $20 billion annually for the country.
This Creative and Entertainment Center, which comprises music, movie, fashion, and ICT, can be a source of growth for our economy, creating up to 1 million jobs for our teeming youths. It will also aid our objective of reducing our dependence on revenues from crude oil. India, for instance, in 2018, generated over $240 billion from the exports of ICT, movies, movie, and fashion-related goods and services. This amount is over 5 times our national earnings from the sale of crude oil. With our national capital resources, human capital resources, and an enabling environment that will help harness the creative talents of our youths, Nigeria has the potential to earn over 20 billion annually from the creative industry. With the growing demand for Nigerian music, movie, and fashion across Africa and in various parts of the globe, our creative industries are spurring innovation, creating jobs, and helping to shape perception of Nigeria as a nation with a strong spirit of creativity and ingenuity. We must do more to encourage the innovative work of these young, talented Nigerians, as they can make significant contributions to the growth and development of our country. Second, given a growing population of close to 200 million people, out of which 60% are under the age of 35, it is imperative that we strive to create opportunities that will keep our youths engaged, as it will portend grave dangers for the progress of our nation if we allow these talents to go to waste.
Godwin Emefiele, the governor of the Central Bank. We'll take a quick breakdown. When we come back, we'll look at Nigeria's Living Standard Survey as reported by the National Bureau of Statistics. Do stay with us. The National Bureau of Statistics last week published the Nigeria Living Standard Survey. This survey, conducted in conjunction with the World Bank, is the first large-scale household survey in a decade, focusing on measuring living standards of the population. Coincidentally, this survey comes as the world marked the World Population Day on Saturday, July 11. Well, joining me now to tell us more about this survey is the Director, Real Sector and Household Statistics Department of the Nigeria National Bureau of Statistics, Mr. Yemi Adeniro, and a senior economist at World Bank, Mr. Abul Azad. Thank you very much, gentlemen, for joining us on the program. Well, Mr. Adeniro, I start with you, Mr. Adeniro. What are the key objectives of this survey and the findings?
Thank you. The Nigerian Living Standard Survey is a household-based survey that collects a wide range of socioeconomic and demographic indicators from individuals and households in Nigeria. We collected data from over 22,000 households over a period of 12 months to get these indicators. The report is out, and some of the findings are in the report as released. Some key objectives of the Nigerian Living Standard Survey is to get wide range of socioeconomic indicators such as education, level of education literacy rate, health, the access to health facilities, type of ailment household experienced, as well as contributing to the final household consumption to the GDP. In addition to this, we also have data from Nigeria Living Standard Survey that can be used to improve the weight that we are using for our consumer price index presently. Among some of the objectives of the survey, these are the key ones.
All right, Mr. Azad, let me get to you. We have the Human Development Report prepared annually by the UNDP for Nigeria, as it does for other countries. In what way is the Nigerian Living Standard Survey different from the Human Development Report of the UNDP?
Thanks for the question. So these are two different things, actually. So Human Development Report, so it focuses on Human Development Index, it focuses on gender inequality, gender index, as well as environmental sustainability and economic sustainability, socioeconomic sustainability. So Living Standard Survey is one of the contributing sources for the Human Development Report.
Now, the report contains an extensive review of the demographic characteristics of Nigeria. How significant is the demographic characteristics to issues of the standards of living of the citizens?
Thank you. The characteristics of a nation determines the GDP expansion and growth. For instance, in Nigeria, we have a very large, broad-based young population. About 54% of male population and about 51% for female population constitute the Nigerian population structure. This is a huge number of youth that can be engaged productively to produce wealth for the nation. We can also look at the average household size in the country when we talk of demographic structure. The average household size in Nigeria is 5.1 persons per household. If you look at the structure, where we have a larger number of members in a household, this means there will be pressure on the resources available to that household and can eventually take the household into poverty. If you look at the data, you will see that the Gawa that is having over 8 on the average members in the household in that state, Jigawa is one of the states that have a higher proportion of households in the poverty or that are poor in the country.
Okay, Mr. Azad, let me throw this question to you. Okay, you want to say something there, Mr. Azad?
Yes, I wanted to add a few more points with Mr. Adeniran is that so to measure the living standard, it is very important to understand the composition of a household. It's age groups, whether people are seeking education, how they're seeking healthcare. So all this information would be actually very, very important to measure the poverty rate in the country. So the demographic information is quite important to understand the composition of a household so that a welfare measure can be drawn.
Now, Mr. Zad, the World Population Day was marked on Saturday, July 11, and the report aims to monitor the progress in population's welfare of Nigerians. How does it tie in with the GDP per capita income of about $2,200 of today?
So this data set is actually quite rich to have a very good understanding of the welfare of the households, the consumption patterns and all. So when it comes to the GDP, so it's basically the household expenditure contributes to the GDP. So it can be
Mm.
measured to what extent household expenditure is contributing to the GDP. So when it comes to the $2,200 GDP per capita, so it does not reflect quite well on the poverty though, but at the same time, countries with higher GDP tend to have lower poverty rate.
Now,
so we can actually measure using these data sources. To what extent GDP growth is contributing towards poverty reduction. So, for example, if a country grow by 5 percentage points, but that not necessarily translate to 5% reduction in poverty, right? So it will also depend on poverty targeted interventions. So the growth not necessarily translate to poverty reduction at the same rate. But at the same time, countries with higher GDP tend to have lower poverty rates.
Still to you, Mr. Azad, what does the survey tell us about the demographics dividends of the country and what are the policy implications?
So demographic dividend is something that it's the working age population, right? So Nigeria can benefit quite a lot from it. For example, 54% of all males and 51% of all females are below the age of 20 years of old. So, so these young working age people can be capitalized to be the productive member of the society and to contribute to the GDP. So many countries actually took advantage of demographic dividend. So there are countries in South Asia, Southeast Asia. So in those places, the demographic dividend were heavily capitalized to attract investments to create a productive workforce to improve the economy. So for example, Bangladesh is a huge example for this, where the country has taken advantage of its young population into labor-intensive industries to attract foreign direct investments and also grow economy. The similar way could be applied in Nigeria also, not necessarily in this exact same way. It has to suit the local the criteria and all. But at the end, demographic dividend could be capitalized to improve the economy, to reduce inequality, to reduce the poverty rate and all.
All right, Mr. Deniro, let me come to you. President Muhammadu Buhari just signed a 10.8 trillion naira budget. Is this enough to improve the living standard of Nigerians, considering the growing population, and in particular with COVID-19 here?
Thank you. The way the economy of the Nigerian is now, we cannot expect a miracle to happen overnight. The budget is huge to stabilize and to make people not further drift into poverty. I think what is much more important is the level of implementation of the budget. If the budget is well released on time and is channeled towards a productive sector of the economy, I think it can substantially reduce the pain that the households and individuals in Nigeria are feeling now. Apart from the level of implementation, the sectors of the economy can also be prioritized. For instance, if more attention is given to micro, small, and medium enterprises, and a lot of investment and policies are geared towards that sector, I think it can really help to stabilize and cushion the effect of COVID-19 in our society. Again, we are glad that the Presidential Task Force on the COVID-19 are doing a great job to ensure that the pandemic is curtailed to a reasonable level. We have not had a serious spike that can take the workforce as well as the economy down the more. With the rate that we are going, if citizens and people comply more with the guidelines given, I think by the time we open more remaining economy that are yet to be opened, we may have more productive and increase or stabilize our GDP. But it cannot happen immediately.
Mr. Deniro, let me still ask you, still in the issue of population and, of course, growth. Is it time for Nigeria to start creating more awareness about sexual and reproductive health needs, or perhaps consideration for birth control, since the economy is not growing at the same pace with the population growth rate?
Yeah, I think the campaign for reduction in number of children and then total fertility rate reduction in the country started not now. I think the government has already started working towards this. If you remember, in 2018, around September, there was a two-day national conference that was called to address the issue of high fertility rate, large number of births to women in the households. So the government has started this. What we just needed is to continue to pursue the population policies that we already have in place in the country, and to continue to strengthen the campaign for the need for us to reduce the fertility rate. Because if the fertility rate is reduced, even by one person out of the total fertility of about 3.5 that we have now, if it is reduced by just one person, it will have a multiplier effect on the GDP in the country and per capita income to the Nigerians.
All right, Mr. Zad, what are the major government policies that the government needs to put in place to improve the various parameters impacting the standard of living of the people of Nigeria?
Better paying jobs. Better paying jobs, improvement in the private sector, Because at the end, when it comes to the policies, so the government actually puts in policies and creates an enabling environment for the private sector to thrive. But at this, it is the private sector that actually creates jobs. And whether it is actually creating better paying jobs and increasing the formal sector. So all this could actually contribute to improve the living standard. So there are plenty of examples around the world that countries have invested in better paying jobs, in employing, in capitalizing the unskilled, semi-skilled, and skilled labor force, and create better jobs for female, for male, and also youths. So which all this could actually contribute towards improving the living standard, because the better income that you have, you will invest more on your consumption, on your food and non-food items. You will invest in education, you will invest in your children. So all this will contribute towards improving the living standard in the country. But at the end, it is better paying jobs.
All right, Mr. Adeniro, the report alluded to the fact that 18% of households are headed by women. What is the implication of this gender data contained in the report? What is the impact of gender on living standards?
Yes, about 18.8% of our households in Nigeria are headed by females. What this means is that government should pay attention to empowerment of women in terms of education and in terms of providing a conducive environment for them to be able to compete favorably with men. Because we now know that a large percentage of households are also headed by female. Not only this, the implementation of the budget that we are just talking about now, when we talk about investing or paying attention to MSME, it's not just to pay attention to micro, small, and medium enterprises, but to look at which of these enterprises are mainly owned or dominated by women. And government can make conscious effort to focus on those particular enterprises so that women can be empowered to also make contribution to the household and to have a better living standard where they are heading.
Go to you now, Mr. Adeniro. The report covered a wide scope on aspects of literacy. What is the impact of literacy on the standard of living of the people?
Literacy, they said, liberates people from poverty. If you are literate, you have the high potential to get a better paid job. If you are literate, you have opportunity to compete for the available decent job in the country. So when people are educated, there are a lot of opportunity opened up for them to be productive in the economy. If you look at the data, the households that are headed by literacy or literate people, they have less proportion of such households that are poor in the country. Whereas, if you see household where the head is not literate, larger proportion of such households are under the poverty line. So which means the more educated people are, the less tendency that their household and themselves will be in poverty. It is always known that the higher the level of education, the lower the tendency to be in poverty.
All right.
So where households are headed by literate people, they get good job and be able to provide for members of their family and then get out of poverty.
Okay, let's wrap up this conversation with Mr. Azad. Mr. Azad, the private sector is playing a major role in providing education and healthcare service delivery. However, most often, many citizens could not afford the private schools or private hospitals. What is your perspective on the idea of private sector delivery of social services? What model can work best to deliver such an outcome?
So private sector actually, you're very right. Private sector plays a very important role in providing healthcare, as well as education and all. So so it depends on the affordability of the people. Whether so if you do look into, for example, Lagos, so there you will see that a lot more people actually seeking healthcare from the private sector. So as from the seeking education from the private schools. That means people actually can afford to get services from the private sector.
All
so
right.
As long as the people's ability could be improved, people's living standard could be improved, their income could be improved. So the private sector could be instrumental in providing these services.
Okay, thank you.
But again, so the government services is a lot more subsidized.
Thank you, Mr. Azad. We may just have to leave
back to
that
you.
conversation. Yeah, we may just have to leave that conversation here. Thank you very much, gentlemen, for your time. Mr. Abdul Azad is a senior economist at World Bank, and of course, Mr. Yemi Adeniro is the director of Sector and Household Statistics Department at the National Bureau of Statistics. We'll do a quick break, and when we come back, we'll cross over to London, and of course, back here, we look at the markets. Do stay with us. All right, let's cross over to London and talk to Juliana. Hello, Juliana. Good morning. Good to see you. Well, it's a brand new week. How are things looking up over there in London?
Good morning, Chimmy. Things are looking bright here in London. It's bright outside and it's also bright on the FTSE. They opened up about 52 points higher. That's really been helped by growth in the hospitality industry, intercontinental hotels. They're up by about 3%. And IAG, the owner of British Airways, they saw their shares in early trading up 2%. This is always despite the fact that there are these second wave coronavirus fears, particularly coming from America. But I've got to say, today may be quiet, but we've got a busy week this week here in the UK. Tomorrow we've got those highly anticipated GDP figures for May. We are also going to have inflation figures on Wednesday, and on Thursday unemployment figures. So I'm sure we'll be chewing all of that later in the week.
I see lots of data this week. Well, we'll keep tracking them. In the meantime, Primark says it will not take advantage of a £30 million handout from the government. Why is Primark taking that stance, and what would that mean for Primark and other retailers?
It's an interesting story, and one that was first reported in the Sunday Times yesterday. Primark quite famously said they lost £650 million every month. They were forced to close due to the lockdown. And the difference between Primark and a lot of other retailers is they do not have an online presence. But despite this, their owners spoke out, Associated British Foods, on the weekend, and they said that they will be rejecting a retention scheme bonus, which has been pushed to a lot of big corporate firms by the Treasury because they don't need the money. Last week, Chancellor Rishi Sunak, on Wednesday, when he delivered his mini statement in the House of Commons, he did say to encourage employers to take back furloughed staff that they would be paying a £1,000 retention bonus scheme. And this has raised eyebrows, particularly amongst the opposition party. The Shadow Chancellor, Annalise Dodds, said it's really quite a silly, gimmicky move for the Chancellor to make, considering most companies that will take back furloughed staffs will do it anyway. They don't need this bonus, and Primark have been the first company to say they don't need it. We're also hearing that William Hill, the betting company, are going to do it, and indeed John Lewis, even though they did say they were closing some of their stores. So now that we are having these corporate giants, it's going to pile pressure on other corporate companies to not take the money from the government, the taxpayer, if they don't need it.
And 84 super rich people, including British screenwriter and director Richard Curtis, have called on governments to permanently increase taxes on them and other members of the wealthy elites to help pay for the economic recovery from the COVID-19 crisis. How much do we know about this story, and what is propelling this move?
Well, it's an interesting story. Yes, if you find that interesting. It's actually come from a Make My Money Matter campaign, which has been led by some celebrities. And basically what they're trying to do is raise awareness about where the money goes from this country's £2 trillion pension pot. At the moment, it's believed that most of the money does go into pretty dirty businesses that are unsustainable, businesses that don't have a real sense of corporate identity or purpose. And so now what these celebrities are trying to do is to try and convince the government that they should be putting this pension funds into more sustainable businesses, like businesses that are trying to push the world into net zero emissions, some businesses that are trying to help with more sociable causes. And so this is why they're making these statements this weekend.
All right, thank you, Juliana. We expect more updates from you later in the day. And back here, Temple is ready to tell us what happened at the markets last week. Temple.
Sure. Thank you, Chimeze. So last week we saw a decline in the market, not so much anyways, just a little above what you could call a marginal decline, 0.12% decline in the market week on week, and that translated to some 15.5 billion naira exit from what you have in the equity capitalization of the exchange. It has now refused to touch the 13 trillion naira mark in the market. Check out what we have in the volume and value of the market for the week. Turnover was positive. Of course, we got value of some 13.5 billion naira. Of course, MTN contributed some 4.2 or 4.8 billion naira to this transaction. In terms of the volume of transactions, check out, you've got some 91.8 million units of transactions or volume of shares of Fidelity Bank traded in addition to this. And of course, you had some 221 million units of GT Bank, then some 55 million units of Zenith Bank in terms of what was contributed to all of this. At the end of the day, you got this number, deals 18,676. And of course, check out what we have in the sectoral performance. The banking stocks were positive. GT Bank was positive. Zenith Bank was positive. A couple of other banks were positive and pushed up the indices of the market cap. And Nestle was down 6.5%. The industrial goods segment of the market, we saw some 2.5% decline in the Boa Cement. Insurance was down due to custodian insurance. And of course, one of the other major companies that you have in that space, Corn Oil, was down by 10% and impacted this segment of the market. We have Mr. Rotimi Fakayejo, stockbroker, joining us now. Mr. Fakayejo, we've seen some 4.8 billion naira contribution to the value of transaction. That's like the turnover that we saw for the week. And of course, everyone is expecting the Q2 numbers now to start trickling in. Folks are very, very bullish on the data consumption that we saw in this period across the telecom space. Now, this 4.8 billion naira to the turnover, is that a precursor to what to expect from this telecoms company, including Airtel? Okay, Mr. Fakayejo, I was asking if the 4.8 billion naira addition that we saw to the market turnover for this week is a precursor to what investors are expecting from Q2 numbers of MTN and, of course, the likes of Airtel, the two telecoms company we have listed on the exchange.
Well, the telecom sector is the bride of the market for now. At least everybody knows that whatever had happened during the lockdown hardly had any effect on any negative effect on the telecom sector. So it is expected that the figures are going to be very good concerning the telecom sector, especially for MTN, which has always been the major in the country. So it is quite amazing that investors are actually repositioning themselves. We have seen a lot of transactions in that sector, and if you remove the total value of transactions for last week, you remove what was done on MTN, then definitely you know that it actually took the chunk of the transactions last week. So it's quite a good expectation, and we hope that the figures will be very as good as we are expecting.
All right, Mr. Rotimi Fakayeja, stockbroker with the Nigerian Stock Exchange. Thank you so much for your insights, and let's hope we have a bullish week ahead. Let's move on now and look at the NASD OTC was negative 1.28% decline last week due to profits taken in the markets. And of course, volume of transaction was 10.73 million units of shares this week and 36 deals in total. CSCS, your market depository, was the main loser for the week. And of course, in terms of the bond side of the market, talking about debts, capital market now, you have 9 deals for the bond side of things. There were three sessions of gains as opposed to 2 sessions of losses on this side of the market, of course, due to some squeeze in liquidity, market liquidity. NTB side of the market, not so much. This was figures for Friday, 6 deals only, 2.98 billion naira worth of transactions took place there. And of course, for the open market operations instruments, here you have some 15 deals. Investors got a bit of declines in terms of yield here. Of course, that's because we saw a little bit of bargain hunting on this side of the market. But basically, folks expecting some inflows into the market this week, and we do hope that there will be some kind of reversal in all of this bearish momentum that we've seen in the market. Bond side of the market, some 105 billion naira worth of inflows expected this week in terms of coupon payments, and of course 146.9 billion naira worth of transactions in the treasury bill space, OMO maturities, all of this expected this week. But we know that the CBN continues to mop up all of this liquidity in the system so they can check so much of that in the financial market. But let's hope for a better week, Chimezie.
See a bright week this week. And so we'll remain optimistic. Thank you. All right, it's on that note that we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimezie Obi Iwago.